From pandemic recovery to inflation shocks, from tech booms to crypto crashes, the last few years have profoundly transformed the global economy. These seismic shifts have reshaped financial landscapes and investor expectations across every sector, creating both unprecedented challenges and remarkable opportunities for growth and innovation.
As we decisively enter 2025, one critical question dominates every astute investor's mind, echoing through boardrooms and individual portfolios alike. Where does real, sustainable wealth grow next in this rapidly evolving financial world? Understanding this is key to navigating the future.
Let's meticulously decode the truth behind the performance of major asset classes: stocks, cryptocurrencies, real estate property, gold, and even wages. We will analyze how each has performed since the pivotal year of 2022, examining their trajectories and underlying factors, and then project what's coming next for each in the immediate future and beyond.
Stocks have certainly had a roller coaster ride, marked by significant volatility and dramatic shifts. After the sharp and impactful 2022 tech crash, which sent ripples across global markets, these markets demonstrated remarkable resilience and subsequently rebounded strongly throughout 2023 and into 2024, surprising many analysts with their vigor.
A significant driver of this recovery was the explosive growth of AI companies, which surged dramatically. This powerful momentum pushed major global indexes, such as the S&P 500 and India's Nifty 50, to unprecedented new highs, reflecting a profound shift in technological and economic leadership and investor confidence in artificial intelligence. However, despite these gains, valuations across many sectors remain significantly stretched, raising concerns among cautious investors. Furthermore, the persistent threat of rising interest rates could very well test investor patience and market stability once again by 2026, potentially leading to a period of reevaluation and adjustment. The S&P 500 is specifically expected to reach a target of 6,500 by the end of 2025, representing a projected 9% increase from its current levels. This optimistic outlook is further supported by an anticipated 11% earnings increase predicted for 2025, followed by a solid 7% increase for 2026, indicating sustained corporate profitability. Examining the period between October 1st, 2022 and September 30th, 2025, the top performing stocks have delivered truly exceptional returns. Palantir Technologies led the pack with an astonishing 1929.92% return, followed closely by Summit Therapeutics at 1875% and MicroStrategy, which also saw a remarkable 1,344.16% increase, showcasing the power of strategic investments in high-growth areas. Cryptocurrency faced one of its hardest and most challenging tests in recent history. From the devastating 2022 meltdown of major exchanges, which shook investor confidence, to Bitcoin's highly anticipated 2024 halving rally, which injected new energy into the market. Extreme volatility has consistently ruled this dynamic asset class, making it a wild ride for participants. Today, both Bitcoin and Ethereum are showing clear signs of recovery, steadily regaining ground after previous downturns. This resurgence is significantly bolstered by renewed institutional interest from major financial players and increasing government attention, which is slowly but surely paving the way for greater legitimacy and broader adoption within the global financial system. By 2027, experts widely predict that crypto will achieve a greater degree of stabilization, evolving beyond its initial perception. It is expected to mature not merely as a speculative get-rich-quick tool, but rather as a legitimate and established digital asset class, standing alongside traditional safe havens like gold and stable investments such as bonds, offering diversification to portfolios. In 2025, achieving regulatory clarity is absolutely crucial for significantly increasing investor confidence and fostering broader market participation in the crypto space. Concurrently, artificial intelligence is rapidly reshaping the crypto landscape, with AI-driven technologies enhancing efficiency, improving security, and driving innovation across various blockchain applications, promising a more robust and intelligent ecosystem. The crypto market cap has impressively grown to over $3.9 trillion in 2025, reflecting substantial investor engagement and capital inflow. This is accompanied by a robust daily trading volume exceeding $144.44 billion, indicating high liquidity and active participation. Bitcoin's dominance within this market stands at a significant 57.25%, underscoring its continued leadership and influence. A notable bearish trend unfortunately emerged in early 2025, primarily attributed to the introduction of new global tariffs and geopolitical tensions, which created market uncertainty. However, a strong and anticipated recovery is widely expected to take hold in the second half of the year as markets adjust and economic conditions stabilize, offering renewed optimism for investors. Real estate, a traditionally stable asset, largely stood firm amidst global economic turbulence, but it was certainly not untouched by the prevailing conditions. After experiencing record highs in 2022 and 2023, housing affordability unfortunately plunged in many nations, making homeownership increasingly challenging for a significant portion of the population. The consistent rise in interest rates effectively cooled the previously frenzied housing markets in many developed economies, moderating price growth. Yet, remarkably, demand in rapidly developing countries, particularly in dynamic regions like India and Southeast Asia, remained exceptionally strong, driven by urbanization, population growth, and expanding middle classes, showcasing regional resilience. Looking ahead, experts forecast modest but steady growth in property prices through 2026. This anticipated growth is primarily driven by ongoing urbanization trends as populations continue to migrate to cities and by significant demographic shifts, including sustained migration patterns, which collectively fuel demand for housing and commercial spaces in key urban centers. Global real estate investment is projected to experience a substantial rise, increasing by 27% to reach an impressive $952 billion in 2025. This significant growth indicates renewed investor confidence and a strong appetite for real estate assets worldwide, driven by institutional capital and a search for stable returns in a volatile economic climate. Gold, the eternal safe haven asset, once again shone brightly during periods of economic uncertainty. When global inflation soared to multi-decade highs and financial markets stumbled under pressure, gold prices responded by hitting unprecedented record highs by 2024, reaffirming its traditional role as a reliable store of value and a hedge against economic instability. As central banks globally continue to strategically diversify their reserves, moving away from over-reliance on single currencies, gold consistently remains the unwavering global anchor of trust. Its intrinsic value and historical stability provide a crucial foundation for national economies, offering a reliable hedge against currency fluctuations and geopolitical risks in an increasingly uncertain world. However, despite its recent strong performance, experts issue a cautionary warning. Gold prices may begin to plateau in the near future. This potential leveling off is anticipated as digital assets continue their ascent, gaining wider acceptance and utility, and as global inflation gradually cools, reducing the immediate urgency for traditional inflation hedges like gold. On June 10, 2025, the price of gold stood at $3,343.44 per ounce, marking an impressive 93% increase over the preceding 5 years, highlighting its robust performance. Looking forward, Goldman Sachs, a leading financial institution, predicts that gold will further rise to $4,000 per troy ounce by mid-2026, indicating continued bullish sentiment for the precious metal. Central banks around the world have been exceptionally strong and consistent buyers of gold, significantly increasing their reserves. This trend is particularly pronounced among central banks in emerging markets, which are strategically accumulating gold to diversify their assets, enhance financial stability, and reduce reliance on the US dollar, signaling a shift in global financial power dynamics.
Unfortunately, wages have consistently failed to keep pace with the relentless rise in prices, leading to a significant erosion of purchasing power for many. From 2022 through 2024, global inflation dramatically outpaced salary growth by nearly 20%, creating a substantial gap that has impacted household budgets and living standards
Worldwide, making it harder for individuals to maintain their financial footing. The accelerating forces of automation, the increasing prevalence of outsourcing, and fundamental shifts in productivity have collectively created widening income gaps across various sectors and demographics. These powerful economic trends have reshaped labor markets, leading to disparities in earnings and opportunities, and posing significant challenges for equitable wealth distribution in the modern economy. The next 2 years could potentially see wages begin to stabilize, offering a glimmer of hope for workers. This stabilization is contingent upon a crucial condition. If artificial intelligence and the burgeoning digital job market successfully create enough new, high value opportunities to absorb displaced workers and drive overall wage growth, offsetting the impacts of automation and other economic shifts. From July 2024 to July 2025, a positive trend emerged where wages grew 1.5 percentage points faster than inflation, providing some relief to consumers. Specifically, nominal wages increased by a healthy 4.2%, while inflation stood at a more moderate 2.7%, indicating a period where earnings began to outpace the cost of living, albeit marginally. However, despite recent positive shifts, a broader historical perspective reveals a more challenging picture. Since January 2021, real wages, which account for inflation, have unfortunately declined by 0.7%. This long-term trend underscores the persistent struggle for many individuals to maintain their purchasing power in the face of cumulative inflationary pressures over several years. So, what truly lies ahead for the global economy and individual investors? Stocks may experience a period of slow, steady, and more sustainable growth, moving away from the rapid surges of recent years. Concurrently, cryptocurrency could increasingly gain mainstream status, integrating further into traditional financial systems and everyday transactions, becoming a more accepted and stable asset class. The trajectory of the property market will largely depend on the future direction and stability of interest rates, which significantly influence borrowing costs and affordability. Meanwhile, gold might hold steady, maintaining its value as economic uncertainty gradually fades, potentially transitioning from a rapid growth asset to a more stable store of wealth in calmer times. Wages, representing the real wild card in this economic equation, will profoundly shape consumer power and overall spending habits, directly impacting economic growth. The great wealth shift isn't over. Rather, it's continuously evolving and changing form, adapting to new technologies, global events, and policy decisions, demanding constant vigilance and strategic adaptation from investors and individuals alike. Artificial intelligence, while promising immense benefits, could initially displace 6 to 7% of the US workforce, leading to temporary job losses in certain sectors. However, this displacement is likely to be transitory, as the same AI advancements are expected to create a significant number of new job opportunities, requiring different skills and fostering innovation across the economy. By the year 2030, the transformative power of artificial intelligence is projected to deliver an astonishing additional $13 trillion in global economic activity. This monumental contribution underscores AI's potential to revolutionize industries, boost productivity, and drive unprecedented growth across various sectors worldwide, fundamentally reshaping the global economic landscape for decades to come. Ultimately, no single asset class wins forever. Market dynamics are constantly shifting, and what performs well today may not tomorrow. Instead, it is the combination of deep knowledge, strategic balance across diverse investments, and precise timing that will collectively decide who truly thrives and prospers in the complex and ever-changing next decade of wealth creation and preservation. So, as these profound economic currents continue to shift and reshape the world of money, what is your strategic move? How will you position yourself to navigate these changes, capitalize on emerging opportunities, and secure your financial future in this dynamic and interconnected global landscape? The choices you make today will define your prosperity tomorrow.